Good morning, everyone. Welcome to our Monday morning trading session. I hope everybody had a nice weekend. Mine was far too busy, as is often the case. All right, so let's see what's going on here. We've got the NASDAQ on this particular monitor. I'm also watching the E-mini S&P and crude oil, but I would be happy to look at any market which is of interest to you. So we just had the opening bell. Market shot up a little bit. You can see a relatively quiet pre-market, although there was a little bit of a gap pre-market that looks like it has since filled. Friday session, a little bit more of a bearish flavor to it before it started going a little bit sideways. Here on the Raptor, you can see same kind of thing. We had that gap from Friday, the market trading up into it. It almost looks like we're going to be working on a cloud crossover signal. That would be our number one signal. Might be getting a little bit more bullish through here, or is this current rally nothing more than a extended bear flag? In which case, we would expect prices to break down this way. Well, we might be getting a hard edge bounce here. Oh, that unfolded really quick. Well, it is Monday morning, and that is typically a little bit of an active time. Can I just get a quick sound check? Randy here is saying he doesn't have any sound. Hello? Okay, great. Thank you. Thank you. I'll just let Randy know here. All right, we are producing a first micro macro cross, and darn it, I'm a little bit late for that one as well. So the first micro macro cross right here at the highs. We did get a red bar buy also, but you know what? I'm just going to let them sort things out here a little bit first. Okay. Uh-oh. See all these buying spikes coming here through the Geiger counter? That's what's pressed the market up. I wonder if we're going to get a little bit of a reset here, or if they're just going to keep going. Seems like they've got some strong momentum to the upside. The hawk giving another signal here, not really one of our 5 high probability signals that we focus on, but if you're looking for a reason to get long, there you go, you got one. We're against our primary resistance line right now from our support and resistance suite. So we may see a reaction there. We may see some selling come into the market. All right, getting that reaction now. Looking for the buyers to show up again. Maybe here at the median line, around 50.61, maybe. Look at the volume that's come in through here, through the primary resistance zone. These bars getting relatively thick. Okay, we've got a, where's my order? I'm going to anticipate a hash mark here printing. This is a little bit presumptuous on my part because you can see sometimes you can get a couple of warning dots printing. Yeah, and that's what happened here too. We got a couple of warning dots. There we go. It's the crossover buy that I was anticipating. And I happened to get in a little bit early. The signal is just printing now. We haven't engaged it just yet. call now. Let's go. Just making a couple notes here in my journal. All right, come on, buyers. They got to show up here somewhere. Well, there's that reaction right off of the median line. If they manage to push back from here, I will certainly bring up my stops. Well, I'd like to get at least one bar in my favor. Good question here from Craig. Craig asks, Eric, would you add to this long if another buy signal came to better your theoretical entry price? Now, what Craig is suggesting is, okay, if we get a hard edge bounce signal here, would I buy in again? It's a notion called price averaging. The idea is that, okay, so I bought at a bad price here. If I buy in at a better price here, the gains from the better price will help offset the losses from the worse fill up here, the worst buy price. It is a sound trading methodology. You'll see big traders do this all the time. So for instance, let's see if I can find a decent example. Okay, this isn't bad through here. So there were traders who were shorting on this breakout right here. They sold right here, and then the market moves against them. Well, the bears, the traders who sold here, also sold here and up here again. And what they would do is this position right here would have profit in it. And then when it got down here, they would look to exit this sell at break even or break even and better. So they made money on this one and they got out at break even or slightly break even and better at this one. And that's actually what causes the market to bounce. And very often it causes markets to channel for precisely the same reason, that the markets get locked in this little back and forth trading where sellers short on a breakout, the market moves against them, they sell some more, they make profit on this sale, and they just look to get out at break even or break even and better on this sale. Likewise, buyers will buy down here, and there were buyers that shorted, or pardon me, went long on this breakout up here. Right? They found themselves on the wrong side of the trade. They bought more here on support, made some profit on this one, and you can see how they were exiting here. This was probably break even on this trade here. So what they lost on this trade was equivalent to what they earned on this trade, and they got out right there. So they walked away flat. They didn't make any money, but they didn't lose any money. See, it's pretty clever, isn't it? So Craig's asking, is that a good idea? Yes, it is, if you can afford it. See, part of the deal with the way we trade is that I kind of max my position on the outset. It's neither good nor bad, it's just one way of trading. Some traders prefer to go in a little bit lighter to give themselves that option to buy in on a reaction. So whether or not we had a signal here or not, you can plainly see that price has changed direction, and now we're getting again our number one signal. So you could look to buy in and average your price. So yes, it is a very sound methodology, but you need to be careful when you employ it, because let's say I bought here at 50.61. Okay, my buy from 50.61 pretty much offsetting any loss I had from selling 50.69. I could just close the whole position out and be roughly square on the trade. However, if I bought at 50.61 and the market continued lower, well, then I would essentially double my loss. Now, since I'm only risking 2% to start, that would theoretically be like a 3 or 4 or maybe even a 5% hit, depending where I got into the trade. That is still within the guidelines of reasonable risk, right? So I haven't risked so much, I haven't blown up 10% of my trading capital, let's say. But that would be the only thing holding me back, Craig, is taking the big hit. Now, of course, what you can do, see, there's 100 ways to skin the trading cat. I could buy in at 50.61 and then bring both my stops up tight. So essentially a hit on 50.61 and a hit on 50.69, still only 2% of my capital, right? Because if I set up a trade like this initially, I would have two contracts in play. See that? So yeah, it's not a bad idea. It's a little bit more complex than most people are accustomed to. Oh, and I think I need to adjust my number 2 settings again. Daniel's asking me, if you want to do this method, you have to open several charts, don't you? And are you referring to the orders themselves, Daniel? No, you don't need to, if you're just talking about the orders. So for instance, if I try to buy in here and place my We'll place my stop loss right there. Well, I'll have to change this. Obviously, I don't want in with 13 contracts. But what will happen is when I get filled here, Trade Manager will average my position. So it will take my long and it will set it right there. So let's say I just bought in down here. Trying to buy the low, going in on a limit order. Trade Manager will average my position. So what I do, if I do that type of thing, is I'll draw a little horizontal line where my orders are, my original orders are, so that I can remember just by looking at the chart, yeah, I got a fill here, 50.69. And it looks like I'm going to get tapped here in a second. All right. But if you want to keep your charts cleaner, Daniel, then yeah, open up another chart. I never thought of that. That's actually a good idea. Okay, so now that we're out of that, let me take a look here. I think, yeah, I'm going to dial up this parameter again. We had a number 2 signal right here. I don't know what happened. Oh, my number 1 didn't print. That's why. Just trying to do a little bit of fine tuning. We'll see whether that number 2 has more follow through to it. Still not there. Where are you? Okay, I'm just playing now while I wait for the next signal to develop. Huh. Still not. Wow. Ain't that something? All right, we'll leave it. We'll leave it for now. I'll have to talk to Ben later. Maybe this printed too close to the hard edge. Maybe that's it. At any rate, it looks as though we may see a little bit of a shift in momentum here this morning. That might have been the bullish rally, and then here come the sellers. A rather small opening range as we near the top of the hour. Oh, I don't know, Jeff. Jeff says, does change in the data series to 30 days affect it? He says he's showing one with 30 days data. Let's see. Nope. All right. We are getting a first micro-macro cross, but we're into the hard edge here on the Eagle. That's not to say the first micro-macro cross is not worth taking. It's just that, once again, we pretty much have to frame this like a counter-trend signal and place the stops above the highs. Now, that's not a bad thing. In fact, here, I might even look at that one, especially now that we get a second push opportunity. I would try to run this one out, I think. In other words, I mean deleting the profit-taking target. And we're fading there now too, so close that out and just go back to waiting on them. Natalia is asking, Eric, for some reason I don't have number two signals on my chart. Is there a problem with the number two? No, there's not a problem with the number two per se. The number two of the three signals is the most subjective. And that's why when we go over the signals, I'm going to teach you to identify a number two as well. So there technically is a number two signal because we've had a retest and the signal printed to short. Now, the problem with computers is computers have zero tolerance for subjectivity, obviously, right? A computer it's all binary. It's either a 1 or a 0. It's either on or it's off. So when the parameters for all the signals were set in code, they had to be given certain parameters again in order for the software to identify when is it a number 1, when is it a number 2, when is it a number 3. Now, the number 1 and number 3 are much easier to program because there's almost no subjectivity in those signals. The number 2, however, relies on a retest of the extreme. This is where the problem in the programming occurs, is how sensitive do you make the program to retests in the extreme? The extreme in this case being the high. So what they did was they gave us these settings here. So the signal parameters for the hard edge signal, that's the number 3. It has, and again, we'll be going over this, so I'll just go over it quickly. It has a trend confirmation parameter, meaning that both clouds need to be in sync. And then this is the number 2 right here, the SE, the soft edge, buy and sell. The extreme retest sensitivity. The higher this value, the less sensitive the retest requirements. I bet if I dialed that up to a 2, I would start to get, oh, still not. Let's dial it up to a 5. We'll go a little extreme here. Still not. All right, it's got to be related to the number of bars then. The minimum bar retest. All right, let's just dial that. All right, you're being difficult this morning. You know what else I can try? We'll reload the Ninja script. Yeah, for whatever reason, that is not wanting to print, which is very odd. I'll have to get into that a little bit later with Ben. But it will be something in the soft edge parameters here. Oh, I think the default is 5. There we go. And when in doubt, restart your NinjaTrader. That's usually a pretty good fix as well. Elmer's saying I also don't have the number 2 signals that you have. My data series, let me take a look here, is set at 24.5. Oops, 24.5. It shouldn't make a difference, but you may want to try that. Yeah, Tony's right. Tony says, darn it, Eric, you broke it again. I know. Tom is asking, do you need a number 1 before you can get a number 2? No. Normally it will work that way. 9 times, 99 times out of 100, it will work that way, but it is not a prerequisite. Still trying to get a handle here on which way they're trying to go. Working on a 4-arrow consolidation, so we've got 1, 2, 3. We're working signal number 4. So there's the 4th warning dot. Here comes the 4th signal. But you know what? I might look to take it below the lows. And try to run it out. Now it's also turning into a macro pullback. go. I may pull the break even down a little bit here as well. Maybe bring it more in line with this little swing low right here. Took a little slip on that, Phil. So we have a 4 arrow and a macro pullback. And I guess a first macro cross, all kind of piggybacking on each other here. Oh, come on. There we go. Come on, get down there now. Tony's asking, Eric, I was watching some older training videos. Ray was using the right mouse button to place orders. When he did that, his trail and profit were as if he had used a trade manager. How do you do that? I don't know, Tony. I think that was something in the early profit manager version of the trade manager. Now, if you right-click on your chart to place an order, let's say we're going to sell down here. If I have my trail indicator enabled, I will get a stop, but I will not get a profit target. Perhaps the way you could do that, and I haven't tried it yet, is if you moved into manual mode. Because manual mode does not require any risk calculation, right? You can risk 100% of your capital if you want in manual mode. I haven't tried it yet, but that might be the way that he did it. Yes, and that's true too. Floyd says Ray had a super keyboard with macros built in. That's true too. I forgot about that. He had that pretty slick gaming controller that he converted to his super mouse. Well, here, you know what? I can try it here. So we're getting just a basic with trend signal. I'll short I'll short here. We've got a stop in play, and I'm in manual mode. We'll see whether or not it gives us a profit objective. That's about the only thing I can think that he did to make it work that way, other than, like Floyd said, he customized his entries. Well, actually, here, we'll just demo it. Let's just get this up here a little closer. No, no. The trail stop, of course, still working, but the break even will come up if you have your auto break even set. But the profit target, yes, I think Floyd is right. He must have programmed some macro in there. And I look away for a moment, and what goes on here, it looks like I hit the break-even trigger and got tapped at break-even. Yes, that's what happened. Darn it. Oh well. Very much a sideways kind of market today. If, just touching on Tony's question again, if faster entries are your concern, so, you know, if you feel it's an issue where you have to go click and click and click, then you may want to look at the Trailblazer. The Trailblazer is a one-click entry system, and it will preset profit objectives and stop losses, but it has no risk component to it. So you need to have a rough idea how much money you're having in play when you take those types of orders. Absolutely. Russell making a great comment here regarding the 4-arrow consolidation. He says when that 4-arrow consolidation prints in a flag format, he says that seems like one of the highest probability signals. And you are absolutely correct, Russell. It is. The 4-arrow consolidation is so strong, in fact, that it is the only hawk signal I will take on a yellow bar. So let's say this had retraced even further and I was printing a couple, 3 yellow bars up here, I would still short a 4-arrow consolidation. That's how strong it is. Let's see if I can even find you an example. Let's see, 1, 2, 3, 4. Yeah, here we go. This same kind of idea. No real trend to speak of, so this would have been a little more difficult to take. But it's the same idea. Oh, actually, that did have a red bar in there. That's actually a red bar buy. But I think you get my point. 1, 2, no. 1, 2, 3. Well, here's one I would have shorted off of a yellow bar. This is more what I was looking at. There is a 4-arrow consolidation with a totally yellow signal. Normally I would disregard those on the hawk because it is yellow. Don't ask me why this bar printed this way. I don't know. It must have been a rather substantial gap. This does not normally happen. But yes, the 4-arrow consolidation is such a powerful signal, especially, as you pointed out, when it makes a bull flag type shape, and a bull flag in an uptrend has this type of shape to it, or a bear flag in a downtrend. Less desirable are the sideways consolidations, although they are still fairly reliable. And the least desirable are the ones that slope with trend. So you'll get 4 buy signals that are printing a little bit higher each time. This is the least favorable because it's almost as though it's the last consolidation, the final consolidation before a possible reversal. But that doesn't mean that it won't reach its profit objective, just that these are more favorable. So yeah, great observation there, Russell. Yes, I hear you, Tony. Tony says, in my case, I'm having some difficulty finding the set prices button because it's grayed out. So Tony says, I was wondering about right-clicking on the chart. Now you can do that. You can also use your buy and sell buttons, right? You won't have a profit objective if you short, if you hit the sell button, you will still get your stop, which is the more important of the two. And then you can manually enter a profit-taking order. So if we shorted here, I could manually enter a profit order. And Tony says, I was just curious, it's not a big deal. Well, it is a big deal, because it annoys the heck out of me too. Ever since, see, this is how much influence I have. Ever since Trade Manager came out, for whatever reason, the programmers have always made the set prices and submit buttons similar. And then they threw the accept button in here. They've always made all these colors the same. And ever since Trade Manager came out, I said, can you guys not choose a different color? I don't care whether it's ugly. Just give me different colors so I know which button is which. Because when I'm in a hurry, I don't have time to read. I want to set up my order. So that's how much influence I have. Now everything is grayed out. But yes, Mark is right. Mark says Adam sent out an email asking for color suggestions. So I think we'll probably see a change soon. And yes, they are going to give the trade manager a cosmetic upgrade and give us some different colors in here. Or at least give us the option to change the colors. I'll make mine butt ugly, but they'll stand out, I guarantee you that. A lot of overlap again. It, it's not quite as obvious on the other tools, but here on the Hawk, to me, it looks like the market is struggling a little bit. Moves down, consolidates. Moves down a little further, consolidates. Moves down, starts to consolidate. Moves down even less, and now we're hesitating again. I thought for sure that this week was going to see a little bit more volatility to it. But maybe not. The E-mini also in a little bit of a slow slide. Let's take a look here at crude oil. Crude oil, we've actually got a hard edge sell, and we do have a second chance at this one with what we refer to as second push entry. So these kinds of signals are always a great way to enter the market because it shows you the limit that the market is prepared to make at the moment. So in other words, we allow the signal to engage, and then we allow the market to retreat from the signal, requiring fresh momentum to actually bring us into this trade. The NQ pretty balanced here at the moment. Spoke too soon. Looks like the Raptor going to produce a cloud crossover signal here. Maybe. I got in too early on the last one, so I'm trying not to get in too early on this one. And then, well, had a macro pullback signal here on the hawk. Don't really have a hawk signal at the moment. The Raptor and the Falcon looking like the two tools giving us the signals here at the moment. And we are back down here to the lows, the overnight lows, so, you know, a sideways session, a bit of a bounce, definitely plausible. Oh, and there it is. Okay. It's funny, the times we're getting our signals today, these are usually times when the market is reversing on itself or just doing all kinds of unpredictable things. Or maybe I should say less predictable things. I think I may try to run this out also. Just in case we get a bit of a trend, see if I can't recover that earlier hit. Floyd says getting a nice run in the EMD, that's the S&P mid cap, the S&P 400. just can't get any follow through. Here we go. Now we're getting a little traction. There we go. All right, I'm going to force this trade to break even now. Carefully don't hit your close button. I'll use the next support line as a profit objective. How are we doing here anyways? Not bad. We've hit our high probability profit target. Hopefully we're not going to see a major swing here and another break-even tap out. That would be most annoying. Come on down. Oh, come on. Right on the support zone. Stinkers. Ah, good question, Jeff. Jeff's thinking big. I like this. Jeff says, how many contracts would you say you can trade on the NQ and the YM, that's the NASDAQ and the mini Dow, without having to deal with more than a tick or two of slippage? You could probably force at least 10 contracts through at a time without serious slippage on the NASDAQ or the mini Dow. When you start pushing more than that, 15 or 20 contracts at a time, you're probably going to look at scaling in, or you're going to look at starting to trade the E-mini. The E-mini, of course, will suck up 20 contracts like nothing. Yeah, it's going to vary. Jeff says, I didn't think the YM had that much depth. It's going to vary by the time of day. It's going to vary by the day itself. But if you're just looking at an average, like I said, you can probably, most times, you could probably max out 10 contracts. Certainly 5. 5 won't give you any problem. And you shouldn't see too much slippage on 10. Of course, you can always use a stop limit order as well, which will limit your slippage to whatever you allow, whether it be 1 tick or 2 ticks or 3 ticks. Yeah, so Jeff says I'm looking to trade the first couple hours after the open, so essentially the morning session. That's when the bulk of the volume is, and of course the closing session, about an hour before the market close, the liquidity goes up as well. Well, I'm not liking the hesitation here, so I'm going to roll my stops in a little bit. Hopefully they won't look too far behind. Jeff says, I like the buy at bid and sell at ask buttons with a preset strategy in place, and then move my stops and targets according to the price action. That's a sound strategy, and what Jeff is talking about when he says buying the bid, selling the ask, uh, he's looking to do limit orders, essentially. Tony, I agree. Tony says, I find the number one signal here on the Raptor is the one that brings home the bacon. Very reliable signal. And like I say, part of the appeal of that signal as well is that it was, the rules for it are very hard and fast. So it was easy for the programmers to program it. We need to see some sellers show up here, though. Come on. No, you scoundrels. Oh, well, at least we took a little bit of profit on that one. So a little bit of a run up back here to the support line around 50.46 quarter. Jeff says it's amazing how the market stalls and reverses off your support and resistance lines. Yes, there was a lot of math that went into these. And they do tend to highlight the sensitive areas or areas that are potentially sensitive. got out a little bit too early there. Getting another macro pullback signal here in the hawk. What I suspect we're going to see is a little bit of a retrace here into the hard edge on the eagle. You can see here trade forecaster as well telling us that we're currently in swing mode for just over 10 minutes, after which we're moving into scalp mode. And that's kind of the tone on the day, isn't it? Now that we're back here near the lows, the overnight lows, market took a little bit of a reaction. And I'm thinking it may try to retrace here to the hard edge before the sellers try to get it to move lower. Yeah, Tony says, now if we can only get the magic mouse out of beta testing. Well, let's see here if the mouse is still working. Let's see if I can push the market a little higher, get up to that hard edge. Come on, let's go. Come on. Nope, it's not working this morning. Oh, it's going the wrong way. Well, we do have something resembling a downtrend. I really don't like this risk scenario because where's that hard edge on the eagle again? 50.52. That's a little cozy to my stops. I haven't even checked the reports calendar. I don't know if there's any reports out today or not. Nope, not today. Let's see, what time is it? 7:47. Boy, they're putting the brakes on. Come on. Oh my gosh, come on. go. Final push. So all I'm looking for is a bar or two here in my favor, and then I'll bring my stops in above this swing high. The ideal time to roll the stops is when we take out the low. In fact, I may move my break even just a little bit further. All right, so I'm going to enable my stops. Try and take a little bit of risk out of the trade. Mark's asking, Eric, why did you take that trade again? It's a macro pullback signal, Mark. It might be a little difficult to see, but the micro line has gone out of sync. Everything else stays in sync. That's what makes that a macro pullback signal. That qualifies as one of our high probability hawk signals. Yes, I think you're right. Tony says even on the thicker candles, the volume is light. Yeah, you're right. Just over 2,000 on that one. What about this one up here? That one's a little bit more average, just under 5,000. Craig is asking, Eric, I missed the single click buy and sell on the new Raptor. Can you show me? This is on the trade manager here. So long as you have a stop enabled. So let's say, we'll go to percentage stop. Okay, so long as you have a stop enabled, if I say press the sell market button, it will default to the quantity right here. By default, it's set at 1. So if I click sell market, I will get a sell order. I will have a stop automatically as per my stop strategy. However, the profit target, I still need to set manually. The only way you get the auto profit target is by using the set prices function on the trade manager. See if we can get this to fall a tick or two, and I'll close it out. There we go. And soon it's going to be time to try to roll these stops in a little bit tighter as well. I'm not liking the rejection here off of the lows. Well, the NQ is still struggling, trying hard to head lower, but not with much success. All right, there you go. That's all you get. All right. Well, it looks like they are content to move sideways today. Craig asks, is there another option besides market orders for the single-click entry? No. If you're just looking to enter with the single push of a button, that's it right there. Otherwise, you can right-click on your chart, and you can select your sell orders or your buy orders. You need to remember that these are live the moment you put them on your chart, if you choose to enter a trade that way. All right, well, like I said, it looks like the market is content to be moving a little bit sideways. I still suspect we're going to see a retest here of the hard edge. Maybe prices trading back around the 50-50 area. That's kind of where we started the morning. But there is a definite downward bias on the day, so I would favor shorting over buying. But of course, that may all change too if we see a little bit of a rally come through. All right, I think we're going to wrap up shop though, and we'll try this all again tomorrow. I will see you then. Bye for now.